Welcome, great hopes, once again. Today I have selected this question from the Free State preparatory paper for 2020, paper 1. It's question 1.1.1 and 1.1.2. I've seen that in my previous videos. I haven't done a full income statement with you. I'm going to do a full income statement, and we're also going to look at the note for the fixed asset calculations. Okay, so this is the information that we are given. Global Trading Limited, you are provided with information from the books of Global Trading Limited. The financial year ended 31 December 2019. The requirement number on 1.1.1, refer to information C, H, and calculate the missing amounts denoted by A to C on the incomplete fixed asset not provided. So we're going to start with 1.1.1 for now, and then we'll move on to 1.1.2 maybe in the next video. Okay, so let's look at the information that we are given here. Okay, we are given information A, incomplete fixed assets note. Okay, and then we are also given information. We are supposed to look at information like what they have told us, information from C and H. Okay, C and H. Let's go on to C. Okay, here is information number C. Okay, and then we look for H. Okay, this is the information that we require. Depreciation must be written off on equipment at 15% per year using the diminishing balance method. Take note that the equipment with the cost price of 18,000 and the carrying value of 12,000 on the first day of the financial year was sold to a director, Tim Liu, on the 30th of September 2019 for 4,000. No entry has been made for any of the transactions. Okay, that is fine. Let's go back again to information A. This is the incomplete fixed asset note. We are supposed to calculate A here, B, and C. So the first thing that we are calculating is the disposal at carrying value. Okay, disposal at carrying value, that is on A. Okay, this one, if we look at this information properly, you can, okay, in order for us to find the disposal at cost, okay, oh no, it's not the disposal. In order for us to find the addition at cost for the vehicles, it's very simple. We simply look at the cost at the beginning of the financial year and the costs at the end of the financial year. The difference between these two cost amounts will give us the addition at cost. I'll repeat again. In order for us to find A, the addition at cost, we are supposed to look at the cost at the beginning and the cost at the end. The difference between the two is the addition that took place within the year. Okay, you can look at it. Okay, the cost at the beginning was 600,000. The cost at the end is 780,000. That can only happen if there was an addition of another vehicle during the course of the year. So this is how we do the calculation. Okay, I'll show it on the answer book, on the answer template that is given. Okay, A, we are simply going to say the cost. Okay, the cost at end minus the cost at the beginning. Okay, so the cost at the end we are given 780,000 minus the cost at the beginning that is given again is 600,000. Okay, 780,000 minus 600,000, we are going to remain with 180,000. So this is A. The addition at cost is 180,000. I hope you have understood that one. This is the cost at the beginning, the cost at the end. The cost at the end is bigger to show that there was an addition during the year. Okay, fine. This is A. It has been solved. Okay, now let's move on to B, part B. Let's go back to information A. B, there's a disposal at carrying value, disposal on the equipment, where we are supposed to use the information that is given on H. Okay, there is a disposal that took place. There's an asset that was sold. Okay, we need to find out how much was the cost price for the asset that was sold. The cost price here, they said, is 18,000, and then the carrying value was 12,000 on the first day of the financial year, and it was sold to a director. Okay, so at this part, if you look at disposals at carrying value, we want to find how much was the carrying value on the time of sale, on the day that this asset was sold. Okay, let's do our calculation. Let me do it with a marker for you so that you'll be able to understand exactly. Okay, so here we have got equipment, okay. We have got the cost price of the equipment that was sold, and then we also need the accumulated depreciation, and then in the end we'll get the carrying value. Okay, so the cost price is 18,000. Okay, it's 18,000. We are supposed to minus the accumulated depreciation. We are given that the accumulated depreciation at the beginning of the year was 6,000, but we also need the depreciation up to the time the asset that was sold, so that we can know the total accumulated depreciation for the asset that was sold. So here I'm going to say plus, we need to calculate the accumulated depreciation. So which method is actually being used by this business? If they are calculating depreciation on the carrying value, it means they are using the diminishing balance method. Okay, they even mentioned the diminishing balance method. So in order for us to calculate the depreciation now, we are going to say, if we check here, the cost for this equipment that was sold, the cost is 18,000, okay? 18,000, if we say 18,000 minus 6,000 here, we are going to remain with 12,000. 12,000 is the carrying value of the asset that was sold. Are we still together? But this is not the day that it was sold. We want to find out how much did it depreciate in this financial year. So we are going to multiply by what is the rate for depreciation. The rate is 15%. We say times 15%. Okay. And then when was it sold? It was sold somewhere. They said, okay, on the 1st, and then on the 30th of September 2019. From the beginning of the financial year up to September, we can calculate to see how many months are there. There are 9 months. I'm sure, if I'm not mistaken, their financial year begins on 1 January. So there are 9 months up to September, 9 months over 12. Okay, so if we do this calculation, we are going 12,000 times 15% times 9 over 12. Let me check on my calculator. We'll get something like 1,350. 1,350. Okay, you might be wondering, where did this 6,000 come from? Okay, it's from saying 18,000 minus 12,000, okay, which is given on the question paper. If you look at the question paper, they said the cost price is 18,000. The carrying value on the day at the beginning of the financial year was 12,000. So if you say 18 minus 12, we remain with 6,000. Remember, here we want to calculate the total accumulated depreciation for the asset before it was sold. So 6,000 plus 1,350 is our total accumulated depreciation. Okay, we can add it. I think it will give us something like 7,350. Okay, so this is the total accumulated depreciation when the asset was sold on the 30th of September 2019. So when we say cost minus accumulated depreciation, we are going to remain with a carrying value of 10,650. Okay, so the question was saying, okay, the question actually wanted us to find the disposals at carrying value. This was the carrying value of the asset by the time it was sold on the 30th of September 2019. Okay, the biggest calculation was here on calculating the total depreciation, okay, in order for us to get the accumulated, the carrying value at the end. So this is how we are supposed to show our calculation, but it's like I've already done everything. So here you're supposed to say 18,000, the cost price, you say minus, okay, remember I said we had 12,000, we had 18,000 minus 12,000 here to get the 6,000 which I recorded here, and then we say minus that calculation that I did here to get, okay, I've added the 1,350 this side. Okay, so this is the cost, and then this is the accumulated depreciation. Cost minus accumulated depreciation, remember the depreciation I said is 7,350, the accumulated depreciation on the day of sale, and then the carrying value now, it is 10,650 rand. Okay, 10,650 rand. And then now on part C, the last part, okay, so we have got B now. what is only left is for us to get C, the depreciation for all the equipment. Already we know the depreciation for the asset that was sold is the 1,350. For the asset that was sold is 1,350. Okay, so what do we do to get the depreciation for all the assets? We are supposed to look first at the old assets, okay, the old or the remaining, the depreciation for the old or the remaining assets, equipment. Okay, all right. So if we go back to the pre-adjustment trial balance, we look at the equipment. Where is our equipment? Let's see, equipment, it was 280,000. The total equipment is 280,000, okay? And one asset with a value of how much? 18,000 was sold, okay? And then also these are the cost prices, okay? And then the accumulated depreciation, okay, of the asset that was sold. Remember, the accumulated depreciation that we had at the beginning that is given there is 70,000, okay? And then the accumulated depreciation that we calculated for the asset that was sold, okay? At this moment we saw that, okay, it was only 1,350, the depreciation that we added, okay? So we are supposed to simply say plus 1,350 so that we can get the total depreciation, okay? And then we are going to remove the depreciation for the asset that was sold. This one is the accumulated depreciation for the asset that was sold. We don't need it in our books anymore, which is 7,350 minus 7,350, okay? So here, 280,000 minus 18,000, okay, we remain something like 262,000, 262,000, okay? And then we say minus the accumulated depreciation. If we say 70,000 plus 1,350 minus 7,350, we'll get something like 64,000. So here we've got the cost, accumulated depreciation, we need the carrying value. Okay, 262,000 minus 64,000, we remain with something like 198,000, and then we multiply by 15%. Okay, it will give us something like, let's go back to our calculators, we'll get something like 29,700. 29,700 is the depreciation for the remaining assets, okay? But now we need the total depreciation. The total depreciation, we are going to say 29,700 plus 1,350 for the asset that was sold. This will give us the total depreciation for this financial year, which will give us something like, let's check, it will become 31,050. 31,050 is the total depreciation for the asset that was sold. Okay, let me also show it on the answer book. Even though I've already done all the calculation, you were simply supposed to say 280,000. Okay, 280,000. These are the costs minus 18,000 to remain with the old assets. The old assets, 200, you remain with 262,000. Okay, this is the cost price now of the old assets. You do the same thing with the depreciation. We had 70,000 for the depreciation, and then we added 1,350. This was the total accumulated depreciation for the year, and then minus 7,350 for our asset disposal, and then it will remain with 64,000. And then we say now this cost minus 64,000, 262,000 minus 64,000. This is a cost. This accumulated depreciation will remain with 198,000 multiplied by 15%, which should give you 29,700. And then we say, therefore, the total now is 29,700 plus 1,350. This is the depreciation for the equipment for the year, which gave us 31,050. I know there's a lot of work when it comes to the issues of depreciation, what I would just urge you, what I would just encourage you to do is to follow all the steps that I have taken slowly. You can watch this video again and again so that you can get a full understanding, especially what we did here when we had to separate the old or the remaining equipment with the new equipment, so that we can actually be able to get the depreciation of the, for the sold equipment, so that we can get the depreciation of the old assets alone and the depreciation of the asset that was disposed alone. After that, we add them together to get the total depreciation that was calculated for this financial year ending 31 December 2019. So this is all for question number 1.1.1, the question for the fixed assets. Expect more and more of questions like this in your examinations, great hopes. I thank you so much. I hope this video has been beneficial. Thank you.